Hey traders, Jeff coming to you from Full Throttle Traders. I want to take a few minutes and break down quite the unusual day today here. The day after the holiday, day after President's Day, and kind of a weird looking day. We're going to break that down in our next session. Hang tight. All right, traders, take a look at today's price action. We opened up with a fairly sizable gap north of the high here on these few weeks ago, and of course on Thursday, Friday. We've almost gapped into what we would call a 3-bar play. Not quite exactly that, because it did break the previous high, but there's a lot of supply here to the left. And typically what happens when you run up into that resistance area is prices pull back. Well, it started higher than that and pulled back down to the floor and a little bit more. The market set in a very poor range of most of the day. As a matter of fact, the last hour here, it's set in about a 35 to 40 cent range in the market. Very tepid volume. At the time, you only had about 15 million shares. As the recording here, about an hour after the market closes, we got about 28 million just from this little push and the post-market volume. You see we're gapping down a little bit from that push. Anyway, nothing was going on. The market was just sitting here stagnated, almost just absorbing that supply. And that's what you want to watch when you see these markets in the area. Is it going to react and just start to kind of fledge backwards in here to these cave in below these moving averages, back below the 8 period and so forth? Market didn't do that today. It did not have a lot of volume earlier, and that's typically the case after a holiday, but it sat here and it just began to kind of like trickle all that supply coming off the market. They weren't in a hurry to rush these prices higher, although they did in the last 7 minutes of the day or 6 minutes of the day, but it just let that supply come off the market. And when the timing was right, they got after it. You can see what happened from here. This bar here is at 356 today. So this is the last 4 to 6 minutes of the day. We went from around 609.86 to 611.36. That's about $1.50 here pretty quick. The entire range of the day wasn't $1.50. So to have that going here, the late day, it shows you that they let these traders go on, and then they came back in and they took this market to the high of the day once more, even exceeding pre-market highs, or right up at least 2 pre-market highs. So where are we in the channel of things in here? You can see that we have definitely, here's the broader trend lines and the center line. At this point here, because the gap downs continue to get bought, we have to assume it's going to stay bullish. Now, you never know. As we were coming into earnings season, this could have went either way. But it kind of goes back to the physics, right? Something in motion has a tendency to stay in motion. And that's what we're seeing here. Something in motion that pauses or stops or pulls back has a more difficult time to regain that momentum. But if it doesn't do that, it just stays consolidatory, doesn't break any downtrend lines of any significance, the chances are the market has a greater possibility of continuing. Now, as I mentioned to you in previous videos, is that we are in what appears to be a stage 3. Now, this is unusual times. We're in an election year. Quite a few things, or not election, we just finished an election year, new administration. So lots changed in that front with the inflation and the PCE numbers and the housing, the interest rates. All those are big, all focus items these days, with the 10-year and the trend and the bonds still up quite a bit in these areas. But you can see right in here, we did make that stance and go higher in this area. It's going to be interesting to see how the market opens tomorrow. Will it continue to go down? Has it broken supply enough where the new bids will take this back up, at least to the center line and maybe beyond? There's nothing to the left. We are at all-time highs here, so anything goes. Now, if you take a look at the Qs, the NASDAQ, similar in some respect, but you're also going to see the line comes in here, and now we're just kind of tipped the hat on the high in here, just barely over that. This isn't too bad, because once you begin to V up and down, you leave, there's less shares traded in here, so supply is very thin. We call that a pivot top. You can get through a pivot top much easier than you can a multiple top where supply is left there. So Qs, and again, we've had a pretty good amount of earnings from, Tesla, Meta recently, Costco. Everything has kind of transpired in the last couple of weeks or so. And with all of that said and done, not all of them beat. There's some pretty dismal earnings, but for the most part, nothing to really draw on the market down here. So we're continuing higher. That being the case, not much to look at in the Russell 2000. We're just simply kind of trending around the trend line back and forth, trading a little bit cleaner here, but outside of the trend line, but far off the highs here started in November. But it's better than it normally does. So we want to keep an eye on that. Also, we want to watch the SMH as we begin to come back in here. These are the lines that I drew in a previous video where I talked about these are the ranges that will probably hold tech in. And the things I'm interested in here, obviously, is the bottom and the tops, but I'm also interested in the midpoints in here. You can see because we have kind of accelerated back and forth in these areas, we just seem to kind of be making these channels, and the moving averages are just kind of whipsawing back and forth in here. So as it stands here on 218, we are definitely moving forward towards that 261, 265 marker, maybe a little bit higher. As we begin to kind of get started in this short week of trading in here. So be careful of where we are because things could flip around in a hurry on right now. But if you had to trade it in a vacuum from where it was, things are pointing higher. Stay bullish side. If you're going to trade to the short side, be sure you're seeing some struggle below the moving averages, some struggle with resistance above, maybe a ceiling above, and we want to see some weakness in there. Relative weakness against the market there. A couple last things here I want to share with you. We took the play on the bull call spread at the 125 by 135 bull call spread. These are expired in 30 days here. So we took the options on the third week options in March. And a couple things about this, and I talked about this in our room today with our traders. When I see prices pulling back and trading clean at or near the 200 moving average, that was definitely an eye catcher. It was flat. I add another few points when I see a flat 200 has a little bit more of a stopping power than maybe an angle 200, right? The angle 200 just means this is going that way, hasn't caught up. A flat 200 basically means that this is the stop. This is the area. It doesn't have to be. Sometimes they'll trade right through this, and this could do the same. So I saw this happening here, but as I begin to kind of broaden my look, I saw the weekly chart down here at the flat 50 MA. It's 2 points, actually 3, because I have the flat 200 in here. So in my mind, I'm looking to build 2 or 3, hopefully more, items that converge together on the larger time frames that will allow me to jump on board, a directional play. In this case, a bull call, a debit spread, vertical spread. The other thing I wanted to show you out to you here is that the weekly chart, and also back here in the daily, but I'll show you the weekly here. When prices ignite or move forward, when they climb, especially on this weekly chart or the daily charts, they leave supply behind, much like a jet taking off. They leave burnt fuel, that smoke, that residue that's actually behind. They leave that behind. Well, the same what happens in trading. Once they take off like this, at the open line here was 127.40. Where do we come down to today? 127.23. And it happens to be married up with the flat 200 on the daily, the flat 50 on the weekly, and the supply bar here, the demand bar here, rather. So that's what gave me the confidence to move into the bull call spread. We're doing pretty well here. Got in about $4.80. We're for about $5.30 right now. Looking for about $6.25 to take some off, and looking for $8, $9 on the balance of that put spread, and we'll trail along the way. A couple more items that were in here. Stocks, we're in the deck here because support bars came in here. Looking for just a few bucks more. This is a stock play, not an option play, because the options were a little bit spready. Wanted to be a little more long dated in this. This has a lot to do with Nike that's been moving up fairly weak here. You see a little bit of a measured move. I did a presentation last week talking about the move here to here is equal the move from here to here. And again, with support back to the left here, that's enough reason to get on board. Maybe go in the money on your calls if you're playing that. I played this in straight stock, but go in the money a little bit more. Give it a wider stance on the upside, and play this back to the 8-period moving average. And finally, KKR doing nicely off the bottom. Also, be mindful. Never use these as stops. They're areas of the term. Always make sure you put that stop down considerably, a decent amount underneath the pivots, because the market will come in here, they will yank every share of stock out here before it touched here. It came down, started to go higher, had a little kind of a pseudo buy setup in the sense of just a kind of a support buy setup. after that buy setup happened, came right back in or took out that low. Anybody use that as a stop or even 50 cents away, got your shares taken from them, and now it's moving back up in this area. So don't do that. That's a big, big no-no. I'd rather not get in or give it a wider stop and make less or wait for it to come back down on a retest before you enter. Don't use that. You got to give these room, especially on these wider dollar stocks like this before they do. TAM was definitely on the books today for moving higher. Microsoft still kind of moving back up here. Take a look how the ETFs ended today. TAN right back up at the top here. So we're getting a little bit of boost in the TAN stocks with the solar. You're going to see that in the SEDG. This is the Solar Technologies making a nice run here. First Solar doing pretty good, coming off the bottom, not as good. And then the ENPH. And then you can also look at the Canadian Solar as well. So TAN's definitely led the way, at least at the end of the day at 1.72. Energy definitely on the move here. I've been watching Devon Energy off the turn here. Talked about this in the room. I don't know if it's going to be a play coming into holidays. Typically means that the oil reserve, the oil reports coming on Thursday. So I might have to watch and see how that does. But I do like the way it's transitioning on the weekly chart. A little higher low above the 8. And then we double bottom here in the daily chart. So we'll keep an eye on that. So anyway, more to come. And don't forget to hit the subscribe button to get on the YouTube channels to get these videos. Every few days, I put out a couple more videos where you kind of learn these lessons from over time and then bring them into practical stance as far as trading. And also be sure to join our room, Full Throttle Traders. Go there, you can access a free 7-day trial. Come in and get some of the lessons that we do. We spend a couple hours a week going through lessons, trainings, like we did today in the mentorship call, and actually live trading as well. Hope to see you there, guys. Have a great rest of the day. Enjoy your week.